All right, guys. Another day down. Let's take a look. We'll start with crude oil because that's really what I was focused on in terms of analysis today and whatnot. So one of the things you'll notice that I often do is I'll split out a profile. Remember, we use two market profile charts. I'll split out one of them and I will keep the other one collapsed. That allows me to see both the unfolding of the story and the developing story and the poor highs and micro poor lows and all this kind of stuff, as well as the shape of the profile and whatnot. Even though it's a lesser factor, it's still nice to be able to see that as it unfolds. So what did we do after the close yesterday? We said, okay, merge or no merge? Well, pretty easy. We're going to merge. Okay, didn't really change the composite value area low, but we are going to adjust composite value high. Where were we opening today? Right in the middle of the profile. So you've really got a couple options in terms of hypos. One is just it's rotational, right? So you could look to get long if we come down and test the lower edge of value. You could look short if we test the upper edge of value. That could be hypos 1 and 2, right? Something like that. But really, if you want to kind of take it to the next level here, your two hypos are this. One, rotational until proven otherwise, or two, a break from balance. And that could be higher or that could be lower. It doesn't matter. That's really that's all there was to a situation where you've got an immediate multi-day balance and nothing significant has happened. The prior day was just more straightforward balancing. You're either going to see more balance or you're going to see a break. And what did we see today? We saw a nice break. So I came in and I initially got long. Some of you may have as well. Right? This was right into the open. We're coming down right into the lower edge of our composite value area. And we get a Heikin-Ashi change after a nice pullback into that level. That's a place to get long. Great. It stops out. Why does it stop out? Because we're bad traders? Because we don't know what we're doing? Because insert whatever phrase you want? No, because there was a condition shift in the market. We positioned our risk reward as we should have for continued, based on one of our laws of market dynamics, continue more of the same, continued balance. And we got a shift. That, if you're positioned, that comes with a stop out. So we had a stop, and then are you worried in B period, C period, D period starts to open up? Are you worried that it's just left you forever and you don't get involved? Maybe, but try and refocus on staying true to the process that we're beginning to develop here, right? And understanding is even a part of a mental framework that some trades are just going to leave us behind and there are no good pullbacks. In this case, we wait till inventories come out at 10:30 in crude, and we get a ramp up to this area here, and this is where you get involved. Now, as some students pointed out, and it depends on the time frame, I've got a 750 volume chart up here. You had an entry here, and that resulted in a stop out, and it wasn't enough bars on the pullback to get you back in. Unfortunate part of our simplistic entry system here. But as a more normal NADRO student, as we actually get into execution techniques and trading, you've probably heard it around in the community before, the art of the re-entry. Okay, so as a normal student will get involved with this play here. They should, at least. So this is a pretty monster trade, and just think about it, guys. It's a basic play. It's a breakout, pull back, right? Breakout. Well, let's look at it. Well, see the D period pullback for the retest, one of our laws, and then continued imbalance, another one of our laws. A lot of drawings here. Now, as we progress and get more advanced as well, you will find other opportunities to also add to positions, to continue to get short, to get into a trade if you missed one from up here, those type things. But for now, and that kind of brings us into, this should be crystal clear before we bring ourselves into the S&P for today. This should be crystal clear. If this as a breakout pullback, short opportunity, risk reward to the downside is not crystal clear, you need to be bringing that up, and we need to be talking about it further. Because if you don't get this stuff really good, you will get left behind in the following lessons, and it's just going to get harder and harder and worse. So make sure you're getting these things down as we cover them. So over to the S&P. Update our charts. Right, we might could say, well, where's the nearest kind of reference site we have? And that would be, you could look at prior value, right? So maybe if we came down and somehow found support here or something, that could be a trade. So that could be a hypo 1, right? We move all the way down here, and if we get this overall breakout pullback from yesterday's value, we could get long from there. If that fails, you have kind of two destinations for that. One is obviously traverse the other side of value, and the other is, well, given that it's struggling, in this case it would be a major struggle if we opened here and got back underneath prior value, but if that did happen, surely it's on the table that we could not only retest the other side of prior value, but that puts us right back in this situation here where we're testing for the third time the overall breakout from the multi-day CVA. Okay. So those could be some hypo 1s to either look long from this area or to look short if that area fails. And then you have a destination here or in here. And then this becomes a major inflection, right? If we stabilize there, you might could find a long if the buyers really react and tell us, okay, they are holding continually, again, for the third day now, the breakout from the CVA. I would lean towards such a aggressive revisit of a CVA after an aggressive break and quite a distance away from the CVA. We may not end up holding. The likelihood definitely goes down. And another thing is that multiple tests into an area begin to weaken that area, right? That's kind of auction market theory. If we were to start to put all this together, and you have a day that comes down into this area, and then another day that comes down into this area, and then another day that comes down into this area, that starts to, it may not show it perfectly on the profile, but ultimately what's unfolding there? It's a form of a weak low, a poor low, a lack of excess there because we keep coming back to it, right? So that does signify the auction is not complete to the downside. So just a nice little hypothetical there to help you continue to focus on auction market theory given different things that can happen. Now, what did I say today in the Daily Market Insights? I said, I'm not doing a prep today. I'll tell you one thing, it might go here. I'm not going to, pat myself on the back for that call. But the most important thing is that even me, with all my tricks and tools and experience and bells and whistles, I came in to the S&P today and said, I'm not going to put out a prep because I don't have enough good stuff to give students and subscribers for a quality daily market insight for the S&P. And, we had some questions in the room today around, well, how should I think of the S&P? Should I just say, well, it's due for a pullback, I just don't know when? Or should we say, well, it's broken away from recent value, so we should just be long? What's our thinking there? Can we do anything? And my response was, at your current level of understanding, what we've covered so far, you've really got nothing to do. You've really got nothing to do. Like I said, if we would have came down and inflected with, giving a breakout pullback of prior structure, all the trades that I'm teaching you right now involve interacting with prior structure. And if you're going to gap up 40 points, you don't have prior structure. So that's just the way it is right now. But that's okay. We will continue to take our bread and butter setups, breakout pullbacks, return pullbacks, and continue. Hopefully if you've only gone back and scrolled through, and I've seen some really fantastic work from some of you scrolling through and making, practice making your CVAs. Don't just do that with one market. Even if you only ever care about trading the S&P, that's all you're ever going to trade. Please pull up crude oil. Get some more reps in. Go through and load up 180 days and practice. Pull up all kinds of markets. You could do this on soybeans. You could do this on the 10-year. You could do this on 24-hour profiles on currencies. You could do this on the hot topics of some of the metals right now with, gold and silver. Keep getting your reps in, even if it's solely for the purpose of getting reps in so that you come back and you have more experience with building CVAs so that you're better suited to do that with something like the S&P. So really that's it. Nothing much to say, nothing to do today with the S&P. And crude, yet again, another picture perfect setup from our lesson. Cheers.